Hello, everyone. My name is Carl Pappo. I lead the Global Investment Grade Bond team here at Allianz Global Investors. The team manages a wide range of both total return and income strategies. Today, I'd like to share one of our strategies that has garnered a lot of attention with investors lately. Allianz Global Floating Rate Note Plus is a high quality income focused fund that is well suited for investors who are concerned about rising rates. What I'd like to do today is explain what a floating rate note is, highlight some of the reasons investors are so interested in them, and discuss some of the benefits of investing in high quality bonds through a fund like ours. What is a floating rate note? We know traditional bonds have a fixed rate of interest, so their price will go up and down depending on the prevailing interest rate environment. Typically, the longer the term the bond, the more sensitive it will be to changes in rates, and more volatile its price will be. We call this sensitivity duration. Floating rate notes, on the other hand, are bonds which pay a coupon that adjusts typically quarterly, sometimes more frequently. We might be paying one of these ourselves with an adjustable rate mortgage or a car loan. Companies and government entities also borrow money in this way by issuing securities in the bond markets. If interest rates rise, a floating rate security will see its coupon adjust higher, all else being equal. This feature keeps the bond price relatively steady, whereas a fixed coupon bond would see its price decline. We have a nice table that is a simple illustration contrasting the impact of prices and coupons of both fixed and floating rate instruments. As you'll be able to see, in a rising rate environment, the floating instrument preserves capital with a stable price and produces more income as rates rise. Why are investors interested in floating rate securities? We have seen a significant increase in global inflation in the last year. This has been a direct result of monetary and fiscal responses following the pandemic and the pricing pressures created by the Ukrainian-Russian conflict. This in turn means that central banks around the world have been prompted to tighten monetary policy by raising interest rates, as most have a mandate to keep prices steady. There are never any certainties when it comes to forecasting the path of rates, but many central banks do provide forward guidance, and you can also see implied rates based on trading activity in money markets. Right now, you can see that in many countries away from China and Japan, the expectation is for several sharp hikes over the next year. Looking in more detail, both the ECB and the Federal Reserve are expected to raise rates by 75 and 200 basis points, respectively, by the end of 2022. The two-year government bond yield can also be used as a proxy for the expected path of short-term rates. In this case, floating rate bonds are very well positioned to benefit from these expected changes in interest rates, as their price will remain stable while the coupon income will increase. Many have already seen the coupons reset higher this year, as they are mostly linked to market-based rates such as LIBOR and SOFR. Meanwhile, traditional fixed-rate bonds have had a very difficult start to the year, with price declines of more than 5%. If inflation continues to run hot and central banks have to raise rates further, there could be more volatility in store. The benefits of investing in high-quality bonds. The last topic we wanted to discuss is the benefits of investing in high-quality bonds through a fund like ours. In doing this, we can produce steady and reliable income through a market cycle while avoiding high volatility and the risk of defaults. A lot of other funds in the floating rate space focus on lower rated issues which may struggle if growth slows down. We can be very flexible with respect to the regions we focus in to invest where companies are benefiting from strong economic performance. We can also allocate freely by sector, again, to focus on stable to improving industries so you can eat well and sleep well. So to sum it up, we think there are three key reasons to consider Allianz Global Floating Rate Notes Plus. Earn more cash by investing in blue chip, higher quality companies. Avoid unwanted interest rate volatility and protect your capital with floating rate assets. And upgrade your bond allocation for a smoother journey. Hopefully everyone found this video useful, and thank you for your time.
Allianz Global Investors.